Now today we've seen stocks come crashing lower. However, the question is the selling over with or just beginning? And stay tuned to the end of this video because I'm going to share with you guys how you can win a 50K take profit trader test account. Now, when we come over and look at how the indices fared across the board, the Dow was up 10 points. NASDAQ was down 314 points. S&P 500 down 37 points, with the Russell 2000 being down 1.76. We come over and look at advancing issues versus declining. There was 59% of issues declining on the day. Then as we come over and look at the sectors across the board, we really only had 3 sectors in the green. Real estate leading the way, followed by consumer defensives, utilities, and healthcare. So I guess that's actually 4. Look at the big laggard out there today. The big laggard was technology, down 1.96%. If we look at a chart of NVIDIA, yikes, that is a nasty looking candle. NVIDIA down 3.5% on the session. Because if we look right here, the Atlanta Fed GDP now growth estimate for quarter 3 falls to 2.3 from 2.5%. I don't know about you, but that doesn't sound like the economy is growing. Then we saw a warning come out today. The Fed's best defense against U.S. sovereign downgrade, says the credit rating agency. Now, what do you guys think? What is the best defense that we have? Is it Trump? Is it Powell? Is it some policy change? Well, if we scroll down here real quick, they basically go on to say the S&P Global reaffirmed it's AA plus sovereign credit rating for the U.S. in a new report late Monday. But, all right, it's going to be a big but it made clear one thing. The independence of the Federal Reserve is of paramount importance if the rating is to be maintained. So if you want Trump to go ahead and fire Powell, what would happen if we lose the credit rating that we actually have? We've already seen us be downgraded from the best rating. We got downgraded a notch. Is the U.S. debt about to be downgraded a little bit more? Let me know your thoughts in the comment section down below. Now, if we look at this article right here, Trump is using the Fed chair selection process to pressure Powell to lower rates. And that goes exactly along with that last article that we just shared, where the credit rating agency says the Fed must maintain its independence, meaning the Fed cannot be influenced what Trump is trying to do. And if you look right here, how they sum it up, the TV style approach could present the White House with an excuse to meet with some current Fed officials who don't support lowering rates. And again, that goes along with Trump is trying to influence the Fed's decision on what is best for the U.S. Now, if we come over and look at Home Depot today, Home Depot, a little bit of bright spot out there, wicked up. However, Home Depot was still able to close up 3.12%. And if you guessed why, yes, it's because of earnings. But if we look at earnings actually came out worse than expected. We had a surprise to the downside of 0.77%. And look at the surprise revenue, minus 143.42 million. Now, let's think about this real quick. All the time when people say, Mike, what do you think XYZ news is going to be? Well, it doesn't really matter what the news is. In this event, Home Depot's earnings was horrible. Home Depot's stock, though, however, went up higher. So whenever looking at news, earnings, whatever the case may be, we want to look at what the news is, but how does the market actually respond to that news? Then today we come over and look at the volatility index, the VIX, spiking up a little bit, closing up 3.54%. We look at dollar index today, dollar index also on the rise up just a bit. And with the dollar index up, we talked about this today on the live stream. Watch gold. Gold was breaking through the 78.6. Watch out, it's probably going to come all the way down towards this lower swing point. And if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Now, I want to let you guys know of 2 amazing prop firm deals out there. The prop firm with the best payout policy out there, 40% off all their valuation accounts. Best yet, no activation fee. Use promo code EPITOME. And Tradeify, celebrating their anniversary for 3 days. They have a massive sale. You can get a 150K account for only $50. If you guys want to see all the prop firms I trade with, use the links in the description box down below. Now, if you'd like the chance to win a 50K Take Profit Trader account, below this video, comment TPT, use code EPITOME. In tomorrow's video, I will announce the winner. Now, if we come over and look at the Fear and Greed Index, right now we're sitting at 60. Hey, nothing to worry about. Come on in, the water is warm. Let me know, today, were you guys actually buying the dip in the market? Because if we come over real quick and we take a look at the SPY on the daily chart, well, one of the areas we talked about was this previous all-time highs. We broke out from it. Are we about to come all the way back down and retest that level? And today we made it down there. The next level I want to watch is the 38% retracement, but let's go ahead and grab some anchored VWAPs real quick. And you can still see we're well above that anchored VWAP. the anchor VWAP is actually closer to the 38% retracement, but it is between the 38 and 50% Fibonacci level. If we get down towards this high volume area right here and we start coming down below that level, watch out, there is a real threat that we make it all the way down to 624.24. Then as we come over and look at the 4-hour chart, I warned you guys about this yesterday. The MACD indicator line's starting to get a bearish cross to the downside. And you can see we started to roll over from this upper level consolidation today. Now, as we come over and look at the 30-minute chart with the volume profiles, notice we have that B as in boy shape profile. Now, this is going to be important because tomorrow, if we're trading above this distribution area, then we can see the market start to bounce up to the upper third of the range. One of the areas I want to watch would be this prior structure breakdown point, somewhere around 642.17. In yesterday's video, I warned you guys about the D-shaped profile. Quite often when we get a D-shaped profile, what do we expect? We expect a potential trap and some type of range expansion. Well, this morning, if you look, the first candle we broke just barely below the low. We ran it all the way back up, taking out the high. So we had a double trap situation. And then the market ended up getting the expansion to the downside. Now we come over and look at the futures markets real quick. On the 4-hour chart, we had this fib level drawn out on the live stream. Notice the 38% retracement comes in about 64.06. We still have not made it down to even a 38% retracement yet. And let's not forget, we still have this untested value area high at about 6375.75. I still think that's a very high probability target, but something I'm watching as we start to come down, we had this level identified. And it's basically a structure breakout point. Candle body right here to the candle wick. Today, we're able to auction all the way through that area. So now I'm going to go ahead and remove that off the chart. But if you notice, as we slice down today, we broke below this area. So if we do start to bounce back up, this would be a logical retracement area right around 64.54. Now, in the event that we do retrace up there, that could actually set up some type of A to B equals C to D pattern. And if you look right there, if we came right up to that structural breakdown point, that would give us a price completion about 63.93, which still would not be enough to go ahead and take out that untested value area high. Now, as we come over and look at the daily profiles on the 30-minute chart, we have that B as in boy shape profile. And you can see we just basically drifted down all day long. And then we got a little bit of a bounce up here at the end. But notice where a majority of the volume was being built out at the lower end of the range. Now, one of the areas we do want to watch is this minus development area, about 64.36. And how high did we actually make it today? We made it right up in that area. First time we come into minus development area, we expect the market to either reject back down or consolidate at that area. Now, tonight or tomorrow, if we can get above this distribution area, I would then look for the market to come right back towards this structure breakdown point, and I'd go ahead and highlight this area out. Candle wick right up here to the candle body. Now, if you're also looking to get long, there's another way we can look to get long, and that would be if you go below value area low and we start coming back up. In that event, I'd want to target the point of control. Then I'd want to go ahead and target kind of the other edge of this distribution area, then the high volume node right here, 64.47, then the structural breakdown point, then value area high, and then see, can we go ahead and reverse the entire move and get a more sustainable pullback? However, I'm not really in that camp. I would prefer to see a little bit of a retracement up and then work our way down towards some of these other high volume areas. Keep in mind, on the composite profile, 64.14 down to 64.06 is a logical area where I expect the market will come down to in the very near future. Now, if we come over and look at the QQQs real quick, Qs making it down to the first anchor VWAP, which we talked about in Sunday's video. Now the question is, can we continue to plow a little bit lower? Not only did we retest the prior all-time high, we also today made it down to the 38% retracement and almost down to the 50% level. Now, if we're going to continue to go lower, I do want to watch the 61.8, 563.54, along with this high volume node at 561. But I want to caution you guys real quick. If we see the Qs starting to break the 78.6, watch out. We're probably going to undo the entire move. And then we'll see if we start to get a more sustainable pullback, maybe even as low as 531.45. Now, on the 4-hour chart, MACD indicator is crossed to the downside. We drew that trend line out here yesterday. Then on the 30-minute chart, notice the MACD indicator is well below the zero line. We have that B as in boy shape profile, and I will not be the slightest bit surprised if maybe tomorrow we spike a little bit below the low, and then we start to come up a little bit, maybe tomorrow forming a D as in dog shape profile and kind of consolidating some of these losses that we had today, working off some of that momentum to the downside before we get ready for the next leg in the market. Now, speaking of tomorrow, before we go ahead and take a look at the futures markets, I do want to remind you, tomorrow is going to be a big day. Tomorrow we have the FOMC meeting minutes coming out at 2 p.m. So tomorrow at 2 o'clock, could we potentially see some more volatility out here in the stock market? Now we come over and look at the 4-hour chart. Notice today we made it all the way down to the 50% Fibonacci level. Not only were we able to take out that untested value area high, but we took out the 38% retracement, 50% retracement. Now the question is, do we start to get a bounce on the way back up? If you look at the profile has very poor structure all along this area. So if we do get a pullback, I won't be the slightest bit surprised. One of the things that we can do though is pull a fib from the high all the way down to the low. Now, if we do go lower tonight or tomorrow, we'd simply want to adjust the Fibonacci level. But for the time being, we'll leave it at today's low. Now, a 38% retracement would be a minor retracement in what could still be a much deeper correction. Now, in the event that we actually do something like this, the A to B leg, we come up to a 38% retracement, notice that ABC pattern would complete about 23,013. If we're actually able to retrace to the 50% level, we'd go all the way up to 23,091. If we make it to the 61.8, that would bring us to 23,172. As we come over and look at the daily profiles on the 30-minute chart, notice today, just sell off, sell off, sell off. We did not get much love out here. Now, at some point, there will be a bounce in the market. There's always going to be a bounce. But one of the critical levels, if you're looking to go long a little bit tonight, I want to caution you guys, watch out for this area right here. For me, this would be a target location I most certainly would want to focus on. 23,512. It's a minus development area. Now, if you look, value area low is down here about 23,426.5. If tonight or tomorrow we break below that level, we start coming back up, we can target the point of control. We can target that minus development area. Then we can look to target any of these other high volume nodes on the composite profile as we work all the way back up towards value area high. Now, let's go ahead and pull a fib from today's move on the way down from the high to the low. Notice that 61.8 fib level also matches up very closely towards that value area high. Now, if you'd like to learn how to set up Take Profit Trader with TradingView, then you want to make sure to check out this video right here.